Good morning, Craig from Prime Ag here. Today we are going to bring you another educational webinar on livestock risk protection. Livestock risk protection is a price protection insurance program that helps you protect the price risk on your livestock. What it does, it sets a floor price for your livestock, and if the price goes below that, there'd be an indemnity payment. It helps manage the price risk only and does not include death loss. It is available every day from 3:30 p.m. in the afternoon until 8:30 the following day, the day that the markets are open. Commodities covered are feeder cattle, unborn under 600 pounders, steer and heifer weight ones between 0 and 600 pounds, and then steer and heifer weight 2, which is 600 to 1,000 pound animals. It also covers on the market side of it, fed cattle and swine. To start things off, we're going to go over just a simple quote on how this program works. So under this one, we're using a feeder cattle example. So as you go across the header of this quote, you can see that our commodity is feeder cattle. The type is steers weight 2. The effective date, or the date that the insurance starts of, is 5/12/25. Your share is 1%. The target weight on these cattle is 1,000 pounds. And for this quote, we're just using the number of head as 1. As we go into the second page of this quote, the things that we look at is the first thing you have to do is you got to pick out your endorsement length. Endorsement lengths run from 13 to 52 weeks. And based off the endorsement date is what we call the end date. So the end date is the second column here, and that's the date that the LRP ends, and that's the day that the price that you pick will be compared to what happens on this end date. As you can see, this end date is 11/10/25, so we consider this a November end date. So on the end date on feeder cattle, you can still retain ownership on that end date or have sold them within 60 days before or after that date. When it comes to fed cattle and swine, the cattle or hogs must be harvested within 60 days before or after this date. The next column we will go into is what we call the expected ending value. So this is the value that we look at going out in November, what the value would be based off of today's date. So when you look at on this feeder cattle quote, we're looking at an ending value of $300.50 per hundredweight. The next column is the actual ending value. That we will not know until the actual end date of 11/10/25. The next thing we look at is the coverage price, and that's based off the coverage price that you pick and the coverage level that you use. And all the coverage level is the higher you go on the level, the less of the subsidy you have from the government. So in our example, we have the green column or row highlighted, which shows that we're going to go with 95% level, which gives you a coverage price of $286. Now the cost of this, in the next column, we have our producer cost per hundredweight, which is $4.87. And then the next column we show is the insured value. What this is the total value of what you're covering per head. So on this column, the next column we have would be your total premium, and then the producer premium, and then the last column is the producer premium per head. The producer premium per head is what it actually costs a producer to what your premium would be. So in order to have proof of ownership at the end of this, you need a couple different things. You could have a purchase agreement that they've been sold. You could have sales receipts from the sale barn. You could have a disinterested third party, like a vet, that would come out, and verify that you actually had these head on that day. And then if it's actually a market animal, which we're not using in this case, a finished animal, a fed steer or a pig, you would just need the receipts from the packer. Now the premium on this is billed the first of the month after the month that your expected ending date was. So with this one, with an expected ending date of 11/10, you'd be billed on 12/1/25, and the due date of that premium would then be 1/1/26. Indemnities will be subtracted from your payment. Now, when we look at LRP final thoughts here, we always want to talk about what some of the advantages of LRP and what some of the disadvantages are. The one advantage, the biggest advantage is you're putting in a price floor. Another thing you can do with LRP is you can have multiple endorsements. So if you have 100 cows and you have 100 calves on the ground, you do not need to do all 100 head at the same time. You can split them up. It's a government subsidies program, which pays up to 35% of the premium. There's no upfront cost, and the premium is paid at the end. It's available every day that the markets are open. There's no minimum contract size. And it's a very flexible and customizable program. And with feeder cattle, you do not have to have them sold to qualify for a payment. When it comes to disadvantages of LRP is you are locked in with the price and you cannot roll it up or down. That is one big disadvantage of LRP, and it's not always in line with basis either. So those are two of the bigger disadvantages, and it does not include death loss. When it comes to the advantages of working a prime ag, the biggest thing that we do is we can help you come up with a diversified sales strategy. We can compare LRP to futures and options. We can help you, go through the different options and try to figure out what's best for your program. We have the market knowledge. We send out charts on where the cattle markets are, and we understand where where the markets are at and the things that we're seeing in the markets that can change them. We understand the seasonal trends. We have the daily market, report available every day for you to read up on what we're seeing in the cattle and the swine markets. We're cash, we understand and know the cash markets, and we're bottom line driven. As an LRP agent, I like selling more insurance because of course our commissions are higher, but we always like looking at different strategies and trying to help you determine what's the best fit for your operation, and the best risk management tool for you to use. To get started or for more information, you can just contact me, Craig, at 262-707-4112, or you can email me at craig@prime-ag.net. Thanks and have a great day.